So hi Alistair, pleasure to have you here with us today.
Thanks, Brenda.
So New Zealand is in the category of countries where houses appear to be pretty much overvalued and then the price is still going up. So some economists actually suggested Kiwis should really consider renting the houses instead of taking too much on debt. Do you share the same viewpoints?
Buying a house is not just a financial decision. It's a highly emotional decision. And there is no doubt that we've seen some adjustment in prices over the last 5 years. We're now in a stage where prices are rising. And particularly in Auckland and also in Christchurch, they're rising pretty fast. We're not quite at the level we were in 2003, 2004, but we're well over a 10% increase year on year. And that's beginning to alarm a lot of people because it does make houses pretty unaffordable for the average income in New Zealand. And when you look at that as a salaried person with a family, you have to say, is it really worthwhile? And is it going to continue? Because unfortunately, much as people want to buy a house to live in, they tend to think of it as an asset and say, well, oh, will it increase by 10% next year and so on? And that's part of the motivation to get in there. There are leading economists like Shamavile Ekwig from New Zealand Institute of Economic Research who categorically says you should rent. And I'm beginning to think he's right, actually, because we have a mindset that says buying is the only option and renting is only a thing you do before you buy. If you rent, there's no doubt based on rental charges around the country, you can get a better house than you would live in if you owned that house. And if you are meticulous and committed about saving, then you can save the differential between the rent and the mortgage and potentially build up an investment income which could be good. So I'm beginning to question this idea that we all should be fixated on buying.
Yeah, because obviously for people who want to buy their house, a lot of, like you said, a lot of emotions, emotional decision, and when the price is going crazily up instead of staying the same, it's very difficult to pick the area you really wanted to buy the house, and then you probably have to go somewhere else to
compromise.
To compromise, yeah. So,
it's a tricky one. I mean, it's one of those classic conundrums about buying a house because you want to buy, as a wish list, you want to buy this area, this type of house with this money. Now, the reality is there's very few people who can tick all three boxes. So something has to be compromised. And the compromise has to be either we take on a bigger mortgage, higher cost, we compromise on size, we go down to 3 bedrooms rather than 4, or we don't buy in this suburb, we buy in somewhere else. And it's unusual to get all three aligned. And as the demand in Auckland particularly is driving the fact that we couldn't even afford, even if we stretch ourselves to the ultimate level, we've stripped it down from 4 bedrooms, 3 bedrooms, 2 bedrooms, and we still can't find these suburbs. You've got to ask yourself, do you really want to live 40k from the city, spend your whole life commuting and pay a massive mortgage, whereas you could live where you wanted to live, and just take a breather, because I don't believe this kind of rate of price increase is sustainable in the long term. It's going to have to hit a bit of an adjustment period, and therefore, don't get spooked that renting is a negative activity.
Yeah, because even you lower down your wish list, you live far away, get your house, but then it's not like we have really convenient public transport system. You still have to commute, and then the petrol price is equally high as well. So it's
those kind of considerations. But I think the other thing, and unfortunately, whenever you talk about houses and you talk about New Zealand, we gravitate to talk about Auckland. And we can't help it because, it's a third of our population, it's our biggest city. And as you say, the commuting issues, the density of population. But I think it's easy for me to say, but it's kind of like a maturity issue. We need to think of Auckland as per a Sydney or a Melbourne. We will grow into a kind of city which is large, covers a large area, and has intensity of living. And that talks this whole discussion about the unitary plan that Auckland Council has put forward. We're going to have to adjust to this kind of living. I think somebody pointed out the other day, we've got too many car parks in Auckland, and that attracts people to come in by car. If we didn't have so many car parks, we might actually get more people on public transport, and less cars on the road, more public transport makes it attractive, and suddenly we mind shift away from this infatuation with saying, well, it's one person, one car in the city. You can't live that way, unfortunately. We need to grow up as a city.
Yeah, so, and also according to the latest stats, like we mentioned earlier, because the price is going upwards and then mortgage debts is kind of rising at the fastest clip for the past 4 years.
Absolutely, yeah.
So is it globally, or is it just in New Zealand?
No, this kind of resurgence in property and the debt associated with it is being seen around the world. The US housing market is picking up. It's been in a malaise for a longer period than New Zealand. The UK the same, and the UK is really priming the pump massively with a government initiative around new houses. Literally, if you were to buy a new house in the UK, you get an enormous government subsidy and a financial underwriting of your mortgage. It's quite a significant incentive, and they face the same problem as New Zealand faces. They need to build houses. We need to build houses. The UK government's incentivising, so we're not alone. Property prices are rising in London at an incredible rate. So again, we're not that different to other parts of the world. Australia as well. It needs to build houses. It's got prices rising. We're coming out of the global, economic recession, and we're moving into a period where there's a catch-up, and a catch-up means you see percentage growth year on year. The question is, are we, so far ahead of where we were in 2007? In reality, the property prices you see today are single-digit increases over 2007. So, 6 years and prices are only up by 5%. Take in inflation, and property prices today in New Zealand are lower in adjusted inflation rate compared to where they were in 2007. So we actually haven't even got back to the normal. So we get caught up in this. Now, Auckland, yes, it is ahead, but even that's only about 5% up compared to 2007 when you adjust for inflation. So you're in a cycle, and we're on the upside of it. We may actually have passed the top.
Yeah.
We never know that till it's passed. That's the trouble.
Because, we do know that Auckland City now do have roughly 17 suburbs with the average housing values at least $1 million or above.
Yep.
And there's a saying saying that houses in Herne Bay will crack 2 million marks. Is that going to be true in the next 3 months? 2 million?
Yeah, okay. Here's a scenario. 5 years from now, 10 suburbs, 2 million, and 3 over 5 million. Because we are going to grow as a country and as a population and as a city. And you go to Sydney and you've got suburbs that are over 5 million. You go to London. I saw statistics today that in the last 12 months there were 5,000 properties sold in London over $1 million. There were about 300 sold over $10 million. It's that kind of scale that comes with density, that comes with business development and investment, and with that comes wealth, and property will increase. Now, it won't go right across the board, but unfortunately you can't build more houses in Herne Bay, and Herne Bay is characterful, convenient, and in high demand, and always will be, because you can't build more Herne Bays. So it will be 2 million, it'll be 3 million, it'll be 4 million. As it was 1 million barely 5-10 years ago, when people were saying, gosh, we got our first $1 million suburb. It is called progress. It's partly called inflation, but it's called economic growth.
So what do you foresee our property market in the next 6 months? Is it going to go up, keep going up crazily, the prices?
No, I think we're going to see a bit of adjustment. I think we've seen, watching it, it's 2 years since we started to see the shortage of listings. That's when we first indicated that the market was beginning to pick up, and we were highlighting that it was going to be a seller's market, and it's continued to be a seller's market. We're getting to a stage now where I think the brakes are being put on by buyers who are basically saying this feels mad, and particularly this entire focus on auctions, that this is getting out of hand. And I think the winter will provide a bit of a cautionary gap. I think speculative prices above $1.3 million, $1.5 million are beginning to slow in Auckland, and outside of the Remueras and the Herne Bays. Yeah,
because obviously if the housing price going to continue to go up, like you said, go as a country, that means our income, the whole country's income, has to go up to actually meet the demand. But at the moment, how's our is that a tricky question?
No, it's not. It's one that I've often heard, actually, that in answer to the question which is often posed as why are our houses so unaffordable, it's not our houses are unaffordable, we just don't pay ourselves well enough. We've always been incredibly cautious about paying people at a decent level, and potentially that could be the issue, because if you compare the kind of earning potential of buying houses in this country compared to cities in Australia, for example, we are out of whack because the income differential is more significant. Australia, higher income, their ratio of house prices are not that different in some ways. We don't pay enough in many ways, and thereby we're not getting the incentive for people to come here into this country.
But then they also have a saying that because New Zealand have a very small market comparing to, I mean, Australia, obviously. So that's why they don't need this kind of, well, talents, or they don't need to pay as much. Just like 80% is fine, doesn't need to go up to 100%. So it's a bit of a... But
we live in a very mobile world, and to retain talent and attract talent, you've got to pay what it costs to do that job in Sydney or Melbourne, to potentially, because otherwise we'll lose that talent to overseas and we'll lose the business opportunity. And I think we need to be realistic about how much we pay people, and that will... And that has an economic benefit, because that plays back into the wider economy when you start paying people for
what
performance.
They deserve to, right.
Exactly. It flows back into the economy.
Then
yes, it flows into house prices,
yeah.
yes, but it flows into other expenditure on other items, which can be New Zealand items, not always imports.
So we have to think of it as a bigger picture.
I'd like to think of it, yes.
All right, thank you, Alistair.
Thank you, Brenda.
So now let's take a short break and we'll be back very shortly. Welcome back, you're watching Finance Weekly. So now, Alistair, the OECD analysis found that housing prices actually differ quite widely across not only Asian countries, but also European countries like Greece, Ireland, Portugal, and equally Asian like Korea and Japan. So if you can briefly tell us what is actually happening there.
Well, house prices are, I guess, in the main successful economic countries, there are those ones where there's still major issues from an economic point of view, are beginning to show the recovery signs. A lot of countries suffered enormously in the post-global financial crisis of 2007 and saw prices fall in the US at extremes up to 50%. Ireland actually more, like 55%. Spain had a catastrophic devaluation of property. Now, a lot of those countries were a function of overbuilding. So they had a massive oversupply, which just created this lack of demand against a massive supply, to which price is the only thing that moves. Those countries are moving back. The other thing we're seeing, obviously, from the impact of Asia is the aspiration to own property as both an investment but also security. And it's noticeable how a number of Asian countries, Singapore, Hong Kong, and China, have put in place restrictions of second home purchase. This is a potential consideration for New Zealand, because people looking to invest in property, recognising the value of property, are themselves looking outside their domestic borders because they cannot buy, literally cannot buy, because either regulations, or in the case of Singapore, some very stringent tax implications. And I was reading a survey out of Malaysia and Singapore the other day, which was saying, the demand for Australia, and as a consequence of New Zealand property, was number 1 and number 2 on their hit list of buyers looking for international acquisition of property. So we're going to see almost property become a bit more of a globally traded. I mean, I hate to use that expression because it's not a liquid market, but as an investment opportunity, it is potentially. So I think we're going to see alignment of price movements. And this could have quite a rippling effect on the New Zealand property market, because if we're seeing even a small number of people in those Asian markets look at New Zealand, in absolute terms, that's a lot for us, and that could affect our pricing. The question is, what do people who are looking to invest want to do with that house? If they want to rent it out, that speaks to satisfying a demand that is there. If they're looking to live in it themselves, then that's good for the economy. If they bring their resources, their money, their investment, their talent, that's good. So ups and downs, I think, in some ways. But the global picture is an improving property market in most countries of the world.
Because I think recently there's also always a huge debate about rich people obviously they have one property of their own that they live in, and then they invest a lot of properties, and then that's causing problems and shortage for people who are really dying to buy the houses. But then because they invest, they bring, you know, so it's going up, and then the price is going crazy. So for people who really wanted to buy, they can't afford like the areas, the houses, and then for people who don't actually live in the house, actually get to buy the properties in the top category.
Yeah, it is one of those conundrums, because when somebody buys as an overseas investor a property, they're usually buying from a domestic owner, and that domestic owner then has the money to go and do something else.
Yeah. Now,
whether that is to downsize and reinvest in a business or something like that, which is good. If it's to buy another house on a stepping up, that just moves the market on. Yeah. It is, and there's a global issue about first-time home buyers, because they are notionally being priced out of not just the New Zealand market, but many markets, and governments, depending on their attitudes, are either supporting first-time buyers or they're not. We've got a generational issue that our baby boomers are moving through retirement. Their asset base is fairly significant, but they're living longer. Yeah. So their ability to provide the inherited wealth to pass down the generations is being locked into property, which is causing some of the imbalance. I think it will begin to move out. There's almost a desire to say to the baby boomers, it's about time you actually relinquish some of that tied up investment asset and distribute it a little bit within your family for the benefit of everyone, and particularly first-time buyers.
Of course.
And so that's true of New Zealand and other countries, I can tell you.
So does it have anything to do with the method of selling the property, like auctioning? Endless auctioning.
It's a different subject, but it's a really interesting subject, because there's no doubt that when you look at, New Zealand in total, auctions are a tiny percentage. Barely 3% of all properties are put to auction in New Zealand, but the Auckland market is the home of auctions. It's almost the only place. Now, that's not surprising, because auctions really only work where you've got a dense property auction, I should say, when you've got a density of population and a strong demand, and we've got that in Auckland. We've got a 2-year imbalance of shortage of supply of property on the market. You've got a steady and strong demand backed by a very attractive financial mortgage situation. Those play to auctions being a very attractive model for selling. Auctions appeal to the vendor and the selling agent because they're fixed term, i.e. there's a definitive date. They lead to unconditional offers, which everybody likes in theory. But my concern is auctions work during a time that those variables are in place. When those variables begin to diminish, the carryover of auctions can be detrimental. And by that I mean money's still available, no doubt about it. Supply is still constrained, but I think the acceptance by the buyer to have to pay these elevated and somewhat stratospheric prices is beginning to tail at auctions, because vendors are sort of getting hyped on the sense that, I'll get another 100,000 or 200,000. Their expectation of the reserve is going up and up. And of course the agent is happy, because they just see a 3-week selling period as a great opportunity to reach commission payment earlier and faster and without conditions, which is very attractive for them. But I think we're beginning to see a kind of, and again it's like a ripple. It starts in the hottest suburbs, so the inner city ring of the kind of the Greylands, the Newlands, the sort of around that area of inner city Auckland, the Ellersleys, the Mount Edens, and it moves out. And in those ones, you start to see auctions failing, and it will start to spread out. Just as auctions were successful in the inner city, they moved to the outer ring. And I think as that occurs, and I've in speaking to local agents recently and looking at the statistics, properties are not selling at auction. They're being passed in and put back on the market.
Because it's too expensive.
Yeah, because people are saying, no, I don't need to. And also, the demand has been satisfied in many cases. And unfortunately, one of the realities of the property market, it's like a piece of elastic. You apply a demand pull, and the supply doesn't change. Sellers don't feel confident.
No.
And then eventually they move. And the trouble is we're at a point in time where the demand on that elastic has come off, but the elastic's still contracting and moving. So properties are still coming on, but their expectation of price is going wild. And the buyers are not there.
No.
And I think we're going to find an overcorrection. That you're going to find in the spring a massive amount of property on the market that just hasn't got a market at prices unrealistic. And that's where I think we'll start to see some hesitation about this pricing.
So do you think the price might drop a little bit, or the market might stabilize a little bit?
I think sellers will be reluctant to accept that the market's dropped. They believe the hype that, you know, it's 10% year-on-year growth and that's going to continue. But in reality, if they've got themselves in a financial situation where they need to move, they're going to have to accept what the market will pay, which might only be, you know, 5% year-on-year growth. But it'll still be better than when they bought it. Likely as not, they bought it in 2005, 2006, and they're up 15-20%. So they'll be okay on that basis.
So what's going to happen? Really?
Well, I think auctions will continue to be the preferred option from the agent's recommendation for at least the next 6-9 months. But I think the data will show that they're not succeeding, and we'll start off with auctions, and properties will pass in auctions and then be sold through negotiation, and gradually the oversupply correction will come in and auctions will go down as a percentage, and we'll get back to negotiated sales because people have conditions attached to the purchase and don't want to go unconditional.
No, of course.
I don't think as yet, I mean, the indications are that mortgage rates are not likely to rise till 2014, and when they do, they're not going to jump up by, you know, 100 basis points. They're probably going to go up by 50 bases, and then maybe another 25, maybe a full point and a half in 2014, but not by 5% increase or anything like that.
Yeah, because people maybe by that time they will start thinking, oh, maybe we should just really rent instead of taking too much debt on.
Yeah, and that takes demand out of the market, because we've had a part of that demand as people who have been renting for 5 years because they didn't like the property market. It wasn't a case of it wasn't growing fast enough, they actually thought it was going to go down, so they got into renting. And they've come out, which created demand, and investors have come back, that's created demand. But I think both of those demands have been satiated such that we're now going to see less demand in the next 6 months.
So lastly, any other general comments you'd like to add?
No, I think exhaustively looked at the property market. I don't think we're going to see a negative correction. I just think we'll see some of the heat come out of the market and some readjustment such that the next 12 months might only see a 5% increase rather than the 10% we've been seeing of late.
Great, thank you so much, Alistair.
Thanks, Brenda.
Thank you for watching Finance Weekly. We'll see you next week the same time.